Good morning to you, our esteemed customer. We are very excited to have you take your time to join this webinar. All right, so the first part of this webinar, we are going to be talking about introduction to business accounting as related to StoreApp. We will define some terms. We'll talk about the structure in place on StoreApp in order for you to, so that you can explore, especially if you are well-grounded with your accounting knowledge. Then the other part of the webinar, we are going to demonstrate how to carry out some accounting operations, such as recording expenses, such as registering assets, and then you will be able to generate some reports, such as income statement and statement of financial position. Then we'll now open the floor for questions and answer. So the first session of this discussion, I will begin. So my name is Sunday Ose. I am one of the customer support specialists with StoreApp, and I have over 7 years of experience helping people to use StoreApp. So that is why I was given this privilege to have this discussion with you, our esteemed customer. So I want to quickly say this, that I am not a professional accountant, even though I was mandated to take some accounting classes in order to be able to understand and also explain the accounting features of StoreApp, but I am not a professional accountant. So if you need accounting services, there are accountants that you can reach out to that will help you. But when it comes to basic understanding of accounting and how StoreApp can help your business, then I can show you the way, and then you can call into our customer support center to also provide answers to whatever questions you can have. Now, let's talk about the introduction to business accounting as it relates to StoreApp and as it relates to business generally, because it is the same standard across board. Now, when we talk about account, the whole idea of account is that we want to record financial transaction that takes place in the business. We want to record it properly in a way that would give the business owner an insight into the performance of their business. So the terms that usually come up when we talk about business accounting are accounts. So in accounting, an account is a record in the general ledger that is used to sort and store transactions. So basically, when we talk about business, it means that businesses must have an account, because account is like a representation of all their records that they need to keep. So, and account types, there are different account types. So account types can fall into assets, there can be liability, there are some accounts like revenue, there's expenses, depending on the end game of that particular account. We are going to give examples at the end of these definitions. So there's another term that we'll be coming across or we'll be using a lot in account, which is double entry. So double entry is a system of account recording where transactions must affect at least 2 accounts equally, but in opposite direction. At least 2 accounts. So it can be more than 2, it can be up to 3, it can be up to 4, but at least there has to be 2 accounts that will be affected by every transaction that takes place in a business. And the way it's going to affect the accounts are equally, but in opposite direction. So we also have another term that we call debit. So a debit is an entry that indicates inflow into an account. So when there's an inflow of money into an account, is generally referred to as debit. And then credit is the opposite, which is an outflow from an account. In order to summarize this and put it into simpler terms, let us revisit one of the questions that we asked during the poll so that we can better understand all these terms. So the question says, when a sale is made to a customer and the customer did not pay, you have a customer that is your loyal customer and they have access to buying things on credit without paying. So when you sell to that customer, so the question says, which of these accounts should be debited? So now it means that when there is a transaction, a sales transaction, it means that accounts has to be involved. So there has to be an account. So this transaction between you, your business, and this customer would involve at least 2 accounts, and the 2 accounts are sales account and receivables account, where the sales refers to revenue, the revenue that's coming from a customer, while the receivable refers to an account that holds money that you are being owed, that somebody has not paid you, yet you have delivered the service. That's what that account represents, a receivable account. So there are 2 accounts now. One of them will be debited, the other will be credited. So the question says, which of these accounts should be debited? Now, from the previous explanation, debit refers to an inflow, while credit refers to an outflow. Now, if you picture it very well, a customer comes in and says, I want to buy something. It means that you are giving out something. It means that an outflow is happening in one account because you are giving out something, and an inflow has to come into another account, which is meaning that you are receiving something into that account. So if we look at it very well, we'll see that it is clear that because you are giving out something, like still you are giving out something to the person, an outflow will take place in the sales account, meaning that you are crediting the sales account. The person is supposed to give you something in return, but because the person is not bringing in cash, is bringing like a promise, or is bringing a future, is going to give you a future amount. So it means that we are going to debit, take something in to the receivable account. So the correct answer to this is receivable, because receivable will be debited, meaning that something will record that, oh, this person is so give me this in my receivable account, while the other account that will be credited is the sales account. So this summarizes all the definitions that we have here. So accounts represent sales and receivable. There can be other accounts that you have in your business, such as inventory, such as your machines, plants and machineries, your shelves. You can create an account for them. Your cash and bank accounts, they are also accounts. You can different types of accounts. And then now, when the customer comes, we have to follow the principle of double entry. It means that when the transaction took place, we have to take something into one account and then take something out of the other account. So that is the principle of double entry. And then we realize that one account will be debited, meaning that something comes in, and then one account will be credited. The effect of the debit and credit on an account will be determined by the type of account that it is. But right now, we are not necessarily focusing on the effect. We are just focusing on what happens when a transaction is to be recorded. So, in summary, 2 accounts, sales and receivable, are affected by this transaction. Sales is credited while receivable is debited. So, having said all this, it means that for a business to really set up their accounting properly, they have to create what we call a chart of accounts. So it means that in line with best practices, in line with advice from professionals, a company should be able to come up with the accounts that they want to use to run their business. So that is basically what is defined as chart of accounts. So at this point, let me show you what we have on StoreApp. So StoreApp allows you to create what we call a chart of accounts. On StoreApp, there are some accounts that have been created automatically. Some accounts have been created automatically because it's a software, but StoreApp allows you to add additional accounts, and that you can do under the accounting menu at the top. Go to accounts and then click on chart of accounts. Under the chart of accounts, you can click on the add new button to add a new account that you want to use for your business. So a proper accounting system requires planning and preparation. And so creating a chart of account is like you are planning and preparing for the accounting in your business. All right, so when you create a chart of account, you'll be required to enter a description and then select the type of account that account is going to be. We mentioned 4 different types of account. There's assets, meaning that the things that you own, things that belongs to you. And there are 2 different types of assets. It can be current or non-current. Then there's liability, things that you owe, what you owe other people or other organizations. but things that you owe, we have those type of accounts. Then we also have revenue account, that is inflow, things that make money, the money that comes in through exchange of either products or services. And then we also have the expenses too. So all these type of accounts are listed here, and then we also broke it down into different subtypes. However, they still fall under those 4 different type of accounts. So when you look at it, according to the example I have here, this is a demo account that I have here. You see that I have different types of accounts. So there is a filter button here for you to select to filter by a particular type of account. So if I want to see all my current assets, I can see all the current assets I have. So my current assets are bank account, cash account. I have another one, CUDA, and then receivable. So current assets are assets that are convertible to cash within a short period of time, say 1 year, within a fiscal year. So while non-current assets or fixed assets are assets that you have to use it for a longer period of time. So it can be up to 5 years, it can be up to 10, like your vehicle, like buildings, like all those things. So basically, you'll be able to identify which one is current, which one is not current. Usually, if it is convertible, you can use it up within a year, then it is a current asset. But just like I said, you can also get advice from your accountant on the classification or on creating a chart of account. But StoreApp allows you to create the chart of account. Now, aside from creating a general chart of account here, StoreApp also allows you to create separate section where you can create your cash and bank account. So under this menu, cash and bank accounts, you can list all your cash and bank account that you'll be using for transaction. By default, you will see bank account and cash book. Now, cash book is an account that holds all cash transactions. So anything that you do in your business and you certify that this thing is done through cash or by cash, you automatically go into or come out of the cash book. For example, if a customer comes into your business and say, I want to buy this thing, is what the value is 10,000 naira, and then the customer brings out 10,000 and gives to you, and then when you are selling, you select cash, StoreApp automatically debits the cash book because you have told StoreApp that you received cash. If you buy from a supplier or you carry out an expenses and you tell StoreApp that you have paid for these expenses and he asks, how did you pay? You paid through cash. StoreApp will automatically also go and credit the cash book because something is coming out of the cash book. So we also have another account that will be there by default, which is bank account. It's just bank account, which represents anything other than cash. So you can edit this bank account and change it to the name of any of your bank account, and you can add other accounts as many as possible. Note that this account does not necessarily mean banks only. It doesn't have to be just cash and bank only. Your interest account can also be created because it's also an account where value of money is kept. So you can create as many accounts as possible. And when you are creating an account, you click on the add account to add the account, enter a description, and then there's a button here that says this is a bank account. So when you select that this account is a bank account, StoreApp will make that account available at the point of sale, meaning that when your cashiers are selling or when cashier sells, they will be able to see this particular account and make use of it for transactions. But if you don't select that this is a bank account, the account will still be existing, but it will not be available at the point of sale for transactions. So with these two menus here, chart of account and cash and bank account, you can use that to create the accounts that you will be using in your business. All right, so aside from creating your accounts that you'll be using in your business, StoreApp also provides you with two kinds of transaction recording, or let me call it account posting. There are two ways that StoreApp records into this account. Don't forget that the essence of having an account is to be able to use it to sort out the transactions that take place in your business. So it means that recording must go on, and then they must affect the accounts that you have. So there are two ways that StoreApp permits you to effect recording into this account. One is automated, meaning that it is tied to the operations that you carry out in your business. So for instance, now let me create an account, a bank account, and let's call this account sample bank account. So this account is a sample bank account. We want to use it for an example and explain what we mean by automatic posting into the account. Now, at the point of sale, a customer walks in and say, I want to buy this item. The cost of the item is 100,000 naira. So, and then I said to the customer, check out, and then the customer says he's going to make a transfer to my account. So you see now, sample bank account is one of the accounts that I have because I selected it as available is a bank account. So let me put the customer's name. Note that this account name or reference is supposed to be the account name of the customer that is making transfer. This will help you when you are reconciling your transfers for the day. If time permits, I will also show you that. All right, so now I've submitted this. Now, these sales have been conducted. This is an operation. I've carried out a sales operation. Now, what StoreApp will do is that behind the scenes, StoreApp will go and do the regular posting. It's going to go and post into the account automatically by itself. So it means that I don't have to go to that account and debit the account and then credit sales. Automatically, StoreApp will do it. So if I go check my report now, so if I go check my report now, I'll see that under my sample bank account, I have a debit of 100,000 naira, and then there's a corresponding 100,000 naira into the sales account. So two accounts are affected. Sales was credited, while because I collected money into the bank account, that sample bank account was debited. So this underscores the need for accurate data entry by those that are carrying out operations in your business, because at the end of the day, each operation is tied to an account posting, and if it is not done properly or correctly, it's going to affect the account, although that can be rectified. But this is just an example. So it's the same thing happens when I make a purchase. So assuming that I make a purchase of an item, I go to purchase stock and then I post an item. Note that at this point, the system will ask me if I have made payment. So the meaning of this is supply from who is supplying me the item. Let's assume this test is supplying me the item, the invoice number. This is the total value. There's no discount. So amount payable is also 50,000 naira. Now it's asking me amount paid, meaning how much have I paid. So if I have paid just part of the money, let's say 20,000 naira, I'll be required to select which account the 20,000 was paid from. So if it's cash, if I pay from cash, then the system will automatically credit the cash account, the cash book that I have on the system. But if not, I can select a particular mode of payment, which is maybe a transfer or check. If it's check, I select check, or if it is transfer, bank payment. And then when I submit, I'll be required to enter to select the account that I'm paying from. So automatically, the system will do two things. Now, 3 accounts will now be affected in this particular scenario. 3 accounts. So I purchased something worth 50,000 naira from a supplier. So it means I'm collecting a value, something that is worth 50,000 naira. So that will be going into my inventory. So it goes into inventory or purchases. And then on the other hand, something has to come out. So it means that I will be crediting my sample bank account because I'm paying 20,000 out of it. So 20,000 naira will go out of that bank account, which is crediting that account. And then the remaining 30,000 naira now will also have to be posted into an account because both sides must be balanced. What is coming in must be equal to what is going out. So we've seen that 50,000 is coming in, 20,000 is going out, but where's the remaining 30,000? So the remaining 30,000 will also be going out from another account that we call payable account, which is also a default account on the system, payable. So payable represents all the things that you are owing somebody that has supplied you or that has provided a service to you. So that is payable. So once you tell the system that you have not made payment, automatically the system credits that payable account. And because it's a liability account, the value will increase. All right, so that is the example I want to show about automatic posting. So when operations are carried out under purchases, under sales, they automatically affect the accounts that are connected to those operations. Now, another method that StoreApp allows you to make posting into the account is through the manual posting. So under the account, we have a menu that is called account posting. Now, this account posting is not automatically turned on by default. Even though if you have the accounting module, you have this account posting, but we don't turn it on automatically because it requires that somebody understands how to use it to make a proper account posting. So that's why we don't turn it on. But if you want it turned on, you can have it turned on for you. So you can also make account postings manually. So basically what that allows you to do is that when you want to add a new posting, it involves the amount, the voucher, remarks, then there will be two accounts, one to be debited and one to be credited. So there are some times that you may need to make some transaction that does not connect to any of the operations that is available on the system. Maybe it's just an operation back end that is not, it doesn't have to do with a customer or a supplier, or you just want to make some posting to correct an account or to update an account. So you can use the manual posting to do that. So you select an account to be debited. That is something, the value that I put here will go into that account, and then another account to be credited. So you can select a customer and then payment type and then also submit. So StoreApp has provision to, in summary, you can create your chart of accounts that you'll be using for your business under the accounting, chart of accounts, and cash and bank accounts. And then you can also make postings into these accounts either automatically through the operations such as sales and purchases, or do it manually by making a direct account posting to the account. All right, so this concludes the first session in this webinar. So we've explained that StoreApp uses the principle of double entry, where one account is debited, another is credited, and then you can create your chart of account. Now, the second part of this webinar, we are going to look at demonstration of how to post some account entries. So we'll look at the following account entries. We've already talked about chart of accounts. So we look at this other demonstration of how to manage expenses, StoreApp. And then the expenses are categorized into two. There are those that are normal, just regular other expenses that you institute expenses that you carry out at the point where you carry them out. And then we also have prepaid expenses that you have to pay in advance for. We also look at how to manage the assets that you have, such as your generator, your shelves, your building, and those things that you have acquired as you do business in order for you to carry out your business. So we also look at two aspects of asset management. If you have a new asset that you are just purchasing, how do you post it? And for those of you that already have an existing asset, but you now want to move it into StoreApp, we'll look at how to add an existing asset. Then we also look at receivable and payable management. That's those that are owing you, those that you are owing, the reconciliation of bank accounts, and then fund movement from one account to another. When we look at two reports, income statement report and statement of financial position reports. So let's take the first one, which is managing of expenses. Now, when it comes to expenses on StoreApp, of course, expenses, when you make an expenses for general expenses that are not prepaid, and by the way, prepaid expenses refer to expenses such as rent, such as insurance, and other things like that. So what is common between those two expenses is that you usually pay an amount down in advance. It's not that the day you pay for 1 year rent is the day you use up that 1 year rent. You have to be depleting that payment gradually. So that is why it falls under the prepaid expenses category. Same thing with insurance. When you pay for insurance, you usually pay in advance, and then as the months go by, as the day goes by, the value for that particular period will be depleted. Accountants have a specific word that they use, which is amortization. So you may want to maybe learn more about that, but that is basically what it means. You pay in advance and then you begin to use up the expenses. Now, for other expenses that are not prepaid, usually only 2 accounts will be affected when you make those expenses. When you make expenses, an expense account will be affected. So you have to create an expense account. On StoreApp, we already have a default expense account. So we have operating expenses. So by default, this operational expense will be on your system, but you can create additional expense account depending on how you want to manage your account. So operational expenses is there as one account, and then the other account will either be the account that you are making payment from for that expense. It can be your cash book, it can be a particular bank account, and it can also be payable, meaning that you have not paid for that expenses, even though that expenses you have received the service for that expenses. Now, by saying expenses, we limit expenses to every other thing that your business incur aside from buying goods. So on StoreApp, we don't regard you purchasing goods as expenses. Have a different definition and different way to manage that. That is under purchases. So when you buy goods, we don't refer to that as expenses. So that's how StoreApp is designed. So, but expenses now covers every other thing such as transport expenses, fueling, utility, and all that. Now, in order to manage expenses, things that you need to do first of all, you ensure that you have the expense account created in the chart of account. So this expense account will always be debited whenever you make expense. So you can have 1 account, you can have 2 accounts, you can have as many accounts as possible, depending on how you want to manage the account in your business, or you can just simply rely on this operational expense account. That is one. Secondly, you also need to have the bank or cash account, which is already created on the system. Then thirdly, you need to have what we call expenses categories. Expenses category. Now, the expenses category is a way to categorize all the expenses that you make in your business. It's different from the account. So while you can have operational expenses account, transport expenses, you're using that to record fueling and all that, you may still want to categorize those expenses based on similarities, because StoreApp has a feature that allows you to see your report, your expenses report, so you know what expenses is. You can summarize your expenses report under the reporting transaction report, and then you see expense report, so you'll be able to have an idea of what is the most thing that you spend money on, and this information might help you or will help you in making future decisions. For instance, if you see that you have to spend a whole lot on fueling, you may want to look at it, what if we change our source of energy? Or if we have to spend a whole lot on logistics, renting vehicles to bring in our goods from the supplier. What if we switch to our own? We just purchase one and then, so that is what categorizing your expenses will do for you. So 3 things that you will need to do: you create an expense account. You can use the default that is on the system, or you can also create under the chart of accounts. Then you can also create an account that the expenses will be coming from. So if you use an interest to offset the expense, you can create an interest account and other types of accounts, and you create expense categories that will help you sort all the expenses. So now, if you to make an expense on StoreApp, you simply come to manage expenses and then click on add expenses. So this select vendor helps you. You can keep track of the vendor that is that you are doing the business with, so that you can have a ledger for that particular vendor. Then the narration, you put the narration, then the dates for the expenses. It might be that day or it might be another date. Then you select an account for that expense. So the account that will be debited will be selected here. So if you have created any expense account, the account will be created, will come out under the part. And then on the right hand side, you select the type of payment. So if you are not paying cash from the cash book, don't forget that the way StoreApp sees cash is that by default, cash goes into the cash book. It affects the cash book. But if you are not paying cash from like your cash book, if you are paying maybe from a separate account, it may be cash, but you are paying from a separate account, then you want to select pay from an account. Then you can now select the expense item from the category that you've created, and then the cost, and then submit. So that way, the expenses will be recorded. So I'll be required to select the account if I'm not using cash. Okay, so the expenses will now be recorded under this recent expenses. And at the same time, you can come to reporting, transaction report, and then see either the expense summary or expense details. Note that this expense that you've made from this particular point, from this location, these expenses will have no effect on your cashier's account. But in some cases, some people, due to the size of their business and the structure, they usually collect money from cashier to offset an expenses. So for instance, now, maybe they want to buy fuel. They say, oh, cashier, bring money from your hand, let's buy fuel. They don't have an interest, they just take money. So in that case, that kind of expenses, in order for it to reflect on the cashier's end of the day activity, it is better to enter the expenses through point of sale. The cashier will have to evacuate the cash. So under the cash evacuation, you can select what the evacuation is used for. So in this case, it is used for fuel and then narration. So automatically, the system will deduct it from cash because it is cash. You are collecting it from the cashier, and then it's going to be affecting the cashier's account when you check the evacuation. But anything other than that, the expenses should be entered here. Now, that is for other expenses. Now, let us look at the case of a prepaid expenses. So for a prepaid expenses, usually you will need more than just the expense account and the cash account. In the case of a prepaid expenses, you will need up to 3 or 4 accounts depending on how you want to create it. So let's look at what happens when you make, let's say you pay for, let's assume this month I'm paying for next year's rent. So if I pay for next year's rent, let's assume I pay 2 million naira for next year's rent. Landlord, this is 2 million naira. So because I have not still in this year and we have not used up the rent, that rent is still regarded as an asset. It's still my property. It's still something I own, even though it is no longer a cash. It is, I've paid it out, but it is still an asset. So it means that you have to create an asset account that will hold the value of that money that you're paying. So under the chart of accounts, you want to create a new account. You can call it prepaid rent. I think I already have it under my example here. So I already have prepaid rent. So, and the type of account that will be selected is, we have a type that is called prepaid account. Prepaid account is also an asset account because you own it. So you can create prepaid rent, prepaid insurance, and prepaid any of the accounts that you want to create. So that is that. Then in addition to creating that asset account where you initially put the money, because the money, if you are paying rent, you have to take the money from your account. Let's assume you have a Zenith Bank and you take it from the Zenith Bank and you pay it to the landlord. So basically you are crediting that Zenith Bank account and you are debiting your prepaid rent account. So your worth has not decreased. You are still owning the money. It's just that the money has moved from Zenith Bank into, it has moved to the prepaid rent account. Now, as you use up that rent, the first day that you use up the rent, the money in that your prepaid rent account will now begin to be depleted or amortized for each day. So it means that you need another account that the depletion will be going into. So that is why under this place, I have another account called rent. I can call it monthly rent or whatever it is, but this account is going to be an expense account. So unlike when you make normal expenses, you only need an expense account. In the case of prepaid rent, you will need both an asset account and an expense account. So let's look at what happens when you pay based on the example. So when it's for a prepaid expenses, when you make it, you go under manage expenses and then add a prepaid. So by adding a prepaid, the system already brings out all the accounts that will be affected. So you can put your narration. You see how to select from the categories that you've created. So creating the account does not negate you creating the categories. So you can put the cost, set 2 million, and then the asset account that it goes to, either prepaid, you select prepaid rent, and then the expense account that will be depleted is the rent account, and then amount paid. So if I have paid, I can enter the amount I have paid and then the method of payment. If not, I leave it as I have not paid and the system will go and credit the payable account. So once I'm done with this, then I also have to select the period that this amount will be valid for. So if you are paying a rent for just a year, then you have to select 1 year. If it's for 6 months, you can change this particular number and select any of the options that apply. So if it's for 6 months, select 6 months. And then once I submit this, the system would show this under the recent expenses. But notice that the status is pending. So for prepaid rent, it has to go through an approval process. We don't just submit it and finalize it immediately. So it's going to be pending so that you can review it. So you can review it and make sure that everything is correct. And then once it is correct, then you can right click on it and select authorize selected expenses. So once you select authorize selected expenses, it's a process that cannot be reversed. So once you select authorize expenses, the system starts the expense. If I double click on it now, this is it now. You see that there's an amortization schedule. So based on the value of this 2 million, it means that my daily rent is 10,989. It means that whether I sell or I don't sell, I've already incurred an expense of 10,989 for that day. So this will help you know your basic expenses, which expenses are basic to you, that whether it doesn't depend on your other activity. It's the fact that your business is existing where it is, you already incurred these expenses. So what the system does is that the system, for every day that you turn on the system, you open StoreApp, the system would extract the value for that day and then depreciate it or amortize it and put it into the rent account. So the value will reduce. So if you look at it now currently, because it's supposed to take effect today, it means that the value of 2 million has reduced to this particular amount, 1,989,010.99 kobo, because I've already spent this amount for today. So we are going to see how this show up on the income statement. All right, so that is that about expenses. So this expenses setup is also similar to the setup for assets. Similar to the setup for assets. So let's quickly take a quick look at registering assets. So like I said, when it comes to asset, there are two ways for posting it. For a new asset, when you come to manage assets, you can add a new asset. But for an asset that you already have, you click on add existing asset. Now, before you do that, you will also need to do the same setup that you did under expenses. You will need to create asset categories. So under your asset categories, you may want to add, for me, I have computers, you can add furnitures, you can have different type of categories. This will help you sort your asset based on the categories that you have created. And at the same time, you also need to create on your chart of account, you also need to create an account for the asset. So you decide how you want to, but for this example, I already have under the assets, I already have computers and electronics. So it's a non-current asset. Computers and electronics. I also have, okay, that's the only one I have. So I can add a new one. I call it furnitures and fittings. Note that when you select the type of account it is, you have to specify that it is a non-current asset, because that will determine whether it will show up in your balance sheet or your income statement. Okay, so I have created this. So to register an asset, for example, let me add the category. So assuming it's an asset that I already have, it means that I'm not interested in posting the purchase value anymore. I'm just interested in bringing the existing value of that asset into my account books. And that is what you want to do for a lot of the assets that you already have, because you already purchased them. So in order to bring them into the system, you have to use this add existing asset. So let's call this shelves. If you have a tag number, you can put the tag number. So purchase date is something I purchased in January. So start date, let's assume it has started from January. What's the current value of the asset? Then it will be required to enter a salvage value. That is the value that, assuming you have used up the asset, have expired, you have used up the whole lifespan of the asset, what will be the value afterwards? So you have to enter it, and then what kind of calculation? So currently we only have a linear calculation for under the asset. In future we'll add other types of calculation, because when it comes to calculation for depreciation on assets, there are different methods. So but for now we only have the linear calculation. So let's assume the useful life for this asset is 5 years. I'll have to select which asset account I'm posting into. So furnitures and fittings, and then what will the depreciation account. So because asset have to depreciate, so when it depreciates, it should go into which account? So I can use my depreciation account for all depreciation. But you can also create different accounts to manage depreciation. As prepaid expenses, when you create the asset or when you migrate the asset, the status will also be pending, and you'll be required to authorize it to start the depreciation. Okay, so it's the same thing now. The example I just showed is how to migrate an existing asset. But for a new asset, you have to click on the Add New Asset button and then also enter your description. It was purchased last Saturday, but we have not commissioned it. So assuming it will be commissioned and we start using it from the 1st of December. So date of purchase and start date do not have to be the same. Purchase is when you bought it, while start date is when do you want to start, when do you start using it. So sometimes you can buy an air conditioner equipment now, but you're still setting up. So, and then maybe you open your business a month or 2 months later, and that is when it starts, depreciating, when it starts counting. So purchase value, so it's expected to use 5 years, and at the end of the 5 years, okay, so I have to also authorize this. So once I've authorized it, it will start, the depreciation should start. If I log out and then log back into the system, so I'll see that I have it approved, and then by double clicking on it, I'll see the schedule. So as it is now, it has not started depreciating. The depreciation amount starts at 1st of December because the start date is in future, and then the amount that will depreciate is 82 naira 10 kobo per day for the next 5 years. So it means that this particular amount will also come up in my income statement report when I'm generating it, and it will come up under the heading. Now let's just quickly look at the income statement report and see what component makes up that report. So under the reporting section, account report, and then I come to income statement, I can select a period of time. So let me select just for today. I want to see my income statement for today. So what the system does is that the system aggregates all the income and expenses accounts and brings them up into the income statement report to give you what you earn versus what you have spent money on. So far today, this is the total sales. So under this sales department sales, the department sale will show up the way you define your department, the way you classify your product, because the revenue that automatically comes up is from your sales. So if you have supermarket, boutique, pharmacy, and all that department, all the departments will be listed. The summary of those will be listed, and the total sale from each of the departments will also be listed, and then the cost of the sale will also show up. So for this particular sale, I don't have any cost, so it means that my gross profit is still this. Then under the breakdown for the operating expenses, the same will list all the accounts, all the expense accounts. So far, this is the depreciation I have for today. I have these operational expenses, this is the rent I have, and as many expense accounts that you've created that has been affected during that period will also be posted, shown here, and then you get a total profit here, or your net profit. Now, there's a component of the income statement that we have not talked about, which is the value added tax. So let me quickly talk about how to set up and manage value added tax in your business. before I now come back to statement of financial position, because our time is fast spent, we want to open the floor for feedback, question, and answer. So let me quickly explain. How do you manage value-added tasks in your business? Now, what the provision that we have for that is that when you are creating your products, when you are adding a new product to the business, you can select whether the product is a VATable item or not. So under this, with this box, if I select allow task calculation, it means that the system will calculate VAT for this item anytime I sell it. And the same way, if I purchase the item, the system automatically assumes that I paid VAT to the supplier. So there's an input VAT and there's an output VAT. If you want to see all the items that are VATable in your business, you can come to the admin, product and services, and then come to taxable products. Under the taxable products, you will see all the items, all the products that are VATable. You can add or remove from this list depending on the kind of products that you have. A lot of people normally ask which products are VATable, which products are not VATable. I think there's a schedule on the FIRS website that helps you know which products are VATable. But generally, drugs and baby foods are not VATable. For every other thing, such as services, it can be any services, it can be supermarket, food, and all those things, you have to pay VAT. But for full comprehensive advice on VAT, you may need to speak to your accountant or to a professional accountant. Now, this is for products. If you have services are on StoreApp, they are automatically VATable. So far, services are automatically VATable, but for products, you can select whether they are VATable or not VATable. I think in the future, we'll also have that options for services as well. So the first thing you need to do when you're managing VAT on your business is to make sure that you have a list of VATable items correctly defined. That is the first thing. Now, the second thing is that you have to turn on VAT calculation. So by default, the software does not turn on VAT calculation. It doesn't start applying VAT. So under the general settings, store settings, and then update sales settings, there's an option to allow VAT. So under the task calculation, by default, it will be on none. But you can now decide that it should either be on deduct from total sale or add to total sale. The difference is that if it is add to total sales, it means that the customer will have to pay additional VAT expense on the purchase. So if an item is 100 naira and the current rate, the VAT rate is 7.5, it means that the customer will pay 100 naira plus 7.5. So the total amount is 107.5. That is what the customer will have to pay. But in the case of deduct from total sales, the system would calculate backwards and make sure that the total amount that the customer is paying is already including VAT. So if the customer is paying 100 naira, it means that a part of that 100 naira is going to be remitted as VAT, while the other part is not. So there's a calculation, so you may not need to worry. So it depends on how you want to make use of this. So let's use deduct from total sales. Then you enter the the VAT rate. Then when you're done with this, you can submit this. Now, after submitting, there's a third settings that you may also want to look into, and that is whether the VAT should show on receipt or not. So it is possible for the system to calculate VAT and not show it on receipt. So under store settings, update all settings, there's a receipt setting here. Under the receipt setting, there's an option that says hide tax on receipt. So while the system is calculating it on the back end, it will not show it if you decide to hide it on receipt. But if you don't hide it, it's going to show the amount the customer has paid on VAT, or the VAT on the purchase. Now, after you're done with all these settings, the next thing is just to continue making sales. The system knows which item is VATable and which one is not VATable. Now, there's a report section where you can see your VAT report. So So we have a new feature that has just been introduced that's called manage sales tax. So when you go to manage sales tax, you will see all the sales tax for a particular period for the purpose of remittance, because it is necessary to remit the VAT for for the previous month to the government. So for VAT in October, you select the month that you are considering, and then under the select mode, there are two modes. So it's either you select use existing transaction or you select to calculate on taxable item. Now this to calculate on taxable item is the one that is default. Now the reason why we have these two modes is because in the past, the way the software calculates VAT on item is a little bit different, and some people are already used to that system. But now that we have restructured it and make it more simpler, then that is why we now have this second mode called recalculate on taxable item, which let me show you how this works. So basically what the system does is that it's going to list all the sales that has been made in that period of time, and then you can see the inputs and then the outputs VAT. So the input VAT is how much you have paid the supplier, and then the output is how much you have received from the customer, and then the difference is the payable. So at the end of the day, there's a button at the lower left that says remit to account. So once you select remit to account, this is summary right at the top right hand side. So this is tax payable. So that payable is 17,846. So I can remit. When I click on remit to account, so the system is going to debit that account. So it means that when I go to check my tax agency account, I will see an amount there that I'm supposed to pay. So the reason why this is so that if there's a need to make an adjustment based on maybe there was a mistake when you're doing your purchasing and all that, and it has affected the calculation, the VAT calculation, you can go back to make those adjustments, and then at the end of the day remit the VAT into the account. So under the payable, I should now see under my payable account those that I'm owing. I see tax agency. So this is the tax agency. So it means that I am currently supposed to pay 17,846 to this particular account. So, and when I make the payment, all I need to do is to right click on it and say add new payment, and then I select the amount that is paid. Then the account to be credited, I also have to select it. So if I check my income statement for that period, the VAT amount should also show up. So I will see this total sales tax that I've incurred in that period of time. Now, the next thing that we want to quickly talk about is the statement of financial position before we now give room for questions and answer. Under the reporting menu, account reports, we have the balance sheet. On the system, we still call it balance sheet. So it's still the same thing as the statement of financial position. And then being a report that has to be displayed as at the present, you can select a particular date to see all the accounts. So when you select this, when you click on this, when you submit this, the system will show you all the available balances in your asset and liability accounts. And then at the top, you are going to see a summary for the assets, the summary for the liability, and then the difference, which will give you the equity. So all this would depend on your accounts that you've created under your chart of accounts. So for every account that you make, either an asset account or a liability account, system automatically brings it up under this section, and then you know what is left for them. So this is the prepaid insurance that I already have before. This is the prepaid rent. I already have that before. And then I have my computer and electronics, furniture and fittings, and all this would always show up under your statement of financial position. So you can export this report and then maybe do other things with the report before you call it your final report. Okay, so from the discussion, we have covered all the points that we have listed here, aside from receivable and payable management, which we have also talked about while during the explanation. So when it comes to receivable, those that represent all the people that are owing you. You have sold something to them or provided a service to them, but they are yet to pay. So the way the software manages this receivable account is that for a person to even buy anything on credit, it means that they have to be initially registered into the system. So you want to come to under admin, transaction management, and then manage customers. Under the manage customers, you can check the credit status of each customer. So you see whether a customer can access credit or not. If you're adding a new customer, the system allows you to enter a credit limit and a validity period for their account. So if these two are left at 0, it means that the customer cannot have access to credit. Now, whenever the customer purchases anything on credit, credit payment option will be used. And when the credit option is used, the system automatically debits that account, that receivable account. And whenever they make payments, you can either take the payment through customer deposit or take the payment through under the receivable account and then enter the payments. And the credit on a particular customer's account can also be transferred to another customer depending on what is obtainable. Accounts and fund movement. There is usually need to move money from one account to another. So for instance, now you make a cash deposit to bank, all the cash that have been received from customer, you are making a deposit or you are making transfer from one account to another. So the system allows you to do that under the account, cash and bank account section. So under the cash and bank account section, you can right click on an account and then select either transfer from. So if I say transfer from this selected account, I'm basically sending money out of this account. So the account will be credited while the other account where the money is going into will be debited. So I have to select an account where the money is going to. So same thing happens when you do a cash deposit or bank deposit, you also have to select transfer from this. In addition to this, for cash deposit, under the cash control evacuation page, there is a button here where you can select cash to bank. So by selecting cash to bank, I can enter the amount of money that I'm taking to bank and then select which account the money is going into. Now, there might be a need to change the balance on an account based on other activities that affect that account aside from your sales. So the system allows you to come to cash and bank account. Under this section, you can right click on this cash or bank account and either record an income or an expenditure in order to update the account. For instance, now if there are charges, they are like POS charges or tax or other charges, you can select it as an expenditure and it's come out on your income statement. And if there's maybe income based on interest and other income that is outside the operation of your sales, you can also record the income into the system. We have an update. As soon as this meeting is over, we send out the documentation so that you can further learn more about the StoreApp accounting and make use of it. We are open to more questions even after this webinar. Our customer support number is available for everyone. If you want to access the customer support number, you can click on the home button on StoreApp. When you click on home button on StoreApp, you either see the customer care number there, or you can also go to support. When you go to support on StoreApp, and you click on support, you see get help. Under the get help, there is a view quick guide button there. When you click on view quick guide, you are going to see a guide on basic things that you can do with StoreApp, how to sell, how to refund, how to make payment and all that. And then at the bottom, you are going to see the customer care number under the contact support section. So you can message the customer care number on WhatsApp or Telegram, and you can also call the number. The customer support is usually active from 8 a.m. to 6 p.m. from Mondays to Friday, and on Saturdays 9 to 5 p.m.
Okay.
Once again, we want to say a very big thank you to everyone that has joined. We want you to know that we value your presence, because we know that it's time, and time is the money. So we thank you for spending this time with us, and we are promising that all the feedbacks that we've gotten, we'll work on the feedback and use it to improve your experience with StoreApp. Our goal is to make sure that StoreApp gives you everything that makes your doing business easy for you, and that is the goal that we are constantly working towards. So thank you once again. So we'll make the recording available, and then we'll send it to the participant, and then we'll also keep in communication with you. So with this, we'll come to the end of the webinar. We wish that you have a very good day.